Welcome to Explain the Charts. Today, August 6th, 2025, we're diving deep into the S&P 500, represented by the SPY ETF, to unpack recent market events and their impact on price action. We'll examine both the macro news and the intricate details on the daily, hourly, and 15-minute charts. Let's start with the latest headlines. The broader S&P 500 index closed lower yesterday, August 5th. This dip was largely attributed to a weaker-than-expected ISM Services survey and President Trump's recent comments on imposing new tariffs on chip and pharmaceutical imports. Such geopolitical and economic news directly influences market sentiment, often leading to immediate price reactions. Despite yesterday's pullback, stock futures are currently showing gains this morning, driven by ongoing corporate earnings reports. This creates a mixed sentiment, where market participants are balancing economic concerns against company-specific performance. Notably, the S&P 500 is still trading near record highs, suggesting underlying strength despite these recent headwinds. Now, let's turn our attention to the daily chart for SPY, showing price action from March 2024 right up to yesterday's close. From a broader perspective, SPY has been in a clear and sustained uptrend for over a year. This long-term bullish momentum is a dominant factor to consider. However, we can observe a significant correction that occurred in early April 2025. Here, SPY plunged sharply from around 564 down to approximately 481 in just a few trading days. This roughly 13% drop was a major reversal from the prior trend, indicating extreme volatility during that period. The swift rebound that followed, pushing prices back above 500 and continuing the ascent, demonstrates strong underlying demand and buyers stepping in quickly on dips. This suggests that while corrections can be sharp, the market has shown resilience and a tendency to recover quickly. Moving closer to the present, SPY has reached new all-time highs in July, nearing the 639 level. The latest daily candle for August 5th shows a close at 627.97, confirming the recent pullback described in the news. To understand recent volatility leading into August, let's switch to the 1-hour chart, covering mid-July. We can see prices ranging generally between 620 and 630 during this period. The chart reveals several attempts to break higher, particularly around the 628 to 629 mark on July 17th and 18th. These attempts were often met with selling pressure, leading to small pullbacks within the hourly time frame. This pattern indicates some resistance building at these levels even before the bigger August 5th drop. Now, let's zoom further into the 15-minute chart to examine the very recent intraday movements from August 1st to August 5th in finer detail. Looking at August 1st, we see SPY opened around 626 and then experienced a significant intraday drop, hitting a low near 619.29 before recovering some of those losses by the close. This 619 level established a critical short-term support that held strong. The subsequent trading sessions on August 4th saw a steady upward move, pushing the price back towards the 631 to 632 level. However, on August 5th, which was yesterday, the market opened around 631.79 and trended downwards for most of the day. The high reached around 632.60 was met with strong selling pressure, leading to a close near 627.97. This confirms the news about the S&P 500 falling and clearly highlights the immediate resistance around 632 and the emergence of a new support zone around 627 to 628. The volume on these recent down moves has been relatively high, indicating conviction behind the selling pressure. So, what are the reasons to be bullish or bearish on SPY in the short and long term? Short-term bearish case. The recent economic data, specifically the weaker ISM Services survey, signals potential economic slowdown. President Trump's proposed tariffs introduce uncertainty and could impact corporate earnings, leading to further price corrections. The 632 to 639 area has acted as a ceiling, suggesting a strong resistance level where sellers are active. A sustained break below the 627.97 close from yesterday could target the August 1st low of 619.29 as the next immediate support. If 619.29 fails to hold, we could see a retest of the 590 to 600 psychological support zone, or even a return to the April 2025 high of 564. Short-term bullish case. Despite recent negative news, market futures are up, indicating that positive earnings from key companies might offset macro concerns. The overall long-term trend remains strongly bullish, and the market has shown a history of buying the dip aggressively, as seen in April 2025. If buying pressure resumes, overcoming the 632 resistance and pushing towards the July all-time high of 639 would be the immediate goal. A decisive breakout above 639, confirmed by strong volume, could signal a continuation of the rally towards new uncharted territories. This would likely be fueled by strong earnings momentum and a perception of limited impact from tariffs. For long-term investors, the dips might be seen as buying opportunities, especially given the historical resilience of the S&P 500. However, short-term traders need to remain nimble, as market volatility is likely to persist given the conflicting catalysts. When considering trades, always look for confirmation beyond just price action. Volume is a crucial indicator. High volume on a breakout or breakdown adds credibility to the move. Also, pay attention to the shorter timeframes like the hourly and 15-minute charts for intraday support and resistance levels. These smaller timeframes provide granular detail on immediate supply and demand zones. For instance, on the 15-minute chart, consistently higher lows or lower highs within the daily range can indicate building momentum for a reversal. The presence of long wicks or hammers near support or shooting stars near resistance can also signal potential reversals. Keep an eye on economic reports and corporate earnings releases, as these are often immediate catalysts for significant price swings. Unforeseen geopolitical developments, like the tariff announcements, can also trigger rapid market shifts. In summary, SPY is at a pivotal juncture, balancing strong long-term bullish sentiment against recent short-term headwinds. The immediate key price levels to watch are the 627 to 628 zone as current support and 632 as immediate resistance. A break below 627 could quickly send SPY towards the 619 support level, reinforced by the August 1st low. The likelihood of this happening increases if upcoming economic data continues to disappoint or if tariff rhetoric escalates, making this moderately likely. Conversely, a push above 632 would target the all-time high near 639, which is the major resistance point. This bullish scenario is also moderately likely if corporate earnings continue to impress and if the market shrugs off macro concerns. Look for strong volume accompanying any major breaks of these levels to confirm the direction. Monitor future economic indicators, especially manufacturing and services data, and keep a close watch on any further developments regarding trade policies. These external factors will be critical in determining SPY's next major move. That's all for today's in-depth analysis on SPY. Don't forget to like this video, subscribe to Explain the Charts, and hit the notification bell for more market insights. Happy trading, and we'll see you in the next one.